If you look at India from a very broader view, India map को अगर देखेंगे तो there are many people working into different industries and different sectors. कोई लोग हैं जो hotels and restaurants में काम कर रहे हैं. There are some people who are working in IT company. There are some people who are working as a content creator into a digital marketing firms. Media. There are some people who are working in the metal industry जो manufacturing में है. कोई food and beverages में है. कोई film production में है. कोई textile के businesses में है. कोई ब्यूटी पार्लर्स के बिजनेस में है. कोई स्कूल ट्यूशन एजुकेशन इंडस्ट्री में है. सो एवरीवन इन इंडिया कंसिडरिंग दिस एंटायर पॉपुलेशन दे आर वेरी वेल डाइवर्टेड बाय डिफरेंट सेक्टर्स. दे सर्व डिफरेंट सेक्टर्स एंड दे वर्क फॉर डिफरेंट सेक्टर्स. सारे सेक्टर्स से हर किसी को सैलरी मिल रहा है एंड एवरी सेक्टर इज अल्टीमेटली सर्विंग टू द नेशन. ये एक ब्रॉडर व्यू रहा इंडियन इकोनॉमी के ऊपर. The primary motto of any government is the economy to remain stable and economy to grow. And for that economy to grow, government concentrates and focuses upon key sectors which are high potential yielding sectors. Now, you must be working in some company or you must be having your own business. In either of these states, your company or your business must be serving some sector. So if that sector is expected to grow, your company will grow and every other company which is serving directly or indirectly to that sector will grow. Now you as an investor, here is an opportunity for you that you invest in those companies which are belonging to a specific sector for a certain period of time where government is focusing the most, and government focuses on key sectors. Rather, economy as a whole grows on some specific sectors depending upon different phases in which it is. So let's get started with this video where we will go through the different economic phases and the economic sectors. So this is how the economic cycle would look like. Along with time into consideration, as and when time progresses, economy always goes through different phases over a period of time. If you look, this initial phase, which was a growing phase where economy was growing, this is called as a bull market. This is an expansion phase of the economy. That means everything is good in this economy at this point in time. I will again go into the details of each and every phase. So at first try to understand that this is called as an expansion phase. This is a peak phase or also called as a matured phase. That means everything in the economy, everything is running at its peak. Thereafter comes a recession or a fallback or a drawdown phase where everything goes down, economy slows down, economic growth is happening, but it is happening at a very lower pace. That's the recession phase. And then at the bottom, it is also called as trough, which is the bottommost phase where everything is going negative. Might be there is a negative growth, might be unemployment rate is very high, the GDP is not growing, economy as a whole is very much declining. It is not growing to that rapid pace as it was during the expansion and recession phase. This is how an ideal state of economic looks like. But in reality, is it this way? The answer is no. It is not horizontal. It is always exponential. So in a context of time, if you look at the GDP growth of Indian economy to that matter, not any economy, and this concept will apply to any other nation, the economic grows in this direction. So it goes through different phases, but it goes in a direction that it always grows from here. The first phase of our discussion is the expansion phase. This phase where the economy starts growing as a whole. So what happens is, in the initial part of this first phase, money is made available by RBI so that there is a huge amount of surplus in the economy. Everything is looking after the growth. As a availability of this money, businesses tend to take a loan in order to grow their business. Because businesses ultimately grow, GDP of the nation grows, there is lower unemployment, businesses don't feel like firing people, they rather feel like hiring people because they are expanding to a different regions, they are expanding with a new plant, new production facility, so on and so forth. That's where we go on a lower unemployment rate. There is more disposable income, salary of the individuals increases, more expenditure because now you imagine that you are having a higher salary or your salary increases. Definitely the next step would happen is you will try to expense out more. The prices of the product increases eventually, and finally that leads to an increase in the inflation. During all of these phases, there are different sectors which also grows in this expansion phase, such as because money has been made available, so very likely banking sector, or I can say finance sector, that's the first sector which will grow. Then because the business grows, these businesses will involve several transportation between facilities. So all of those transport related sectors, Then further technology related sectors, capital goods such as machineries, equipments, all of those things required. The capital goods sector that would also grow during this business growth phase. Because of the heavy amount of income available with individuals, sectors which could be relating to luxury segment, that would also grow. Tourism, these sectors also grow. So during expansion phase, if you invest your money in any of these sectors, very likely you are to get a very good return. As the economy grows, it approaches the top state, which is this peak state over here. During this stage, the money supply is obviously very high, so money supply needs to be controlled. That's why RBI intervenes and RBI increases the interest rate at which it is making the money available in the economy. That's the first point, the first move which happens. The production capacity of all the companies in the overall economy is at peak. The factories are running at its peak, the machineries are running at its peak. The employees are getting higher amount of salary, because of which there are higher expenses happening. Everywhere there is an inflation news, and you will see the prices of the product are all increasing. Because of this heavy disposal of incomes, sectors such as all of those luxury segment products, maybe it is outing, tourism, you will definitely plan for staycations, party with your friends. So all of those liquor brands and companies who are belonging to liquor as a sector, then because the production is at peak over here, energy sector, then technology sector. So all those consumer discretionary sector, the things which are not essential for your day-to-day living, ultimately grows during the peak time of the economy. Then next comes the recession, or we can call it as an early recession phase. So during that period, the money supply has already been tightened by the government. Government definitely pinches everyone by a very high interest rate. So money supply is tightened, because of which the production, the businesses which was growing earlier during an expansion phase, they stop their growth. The consumer spending decreases. During this phase, very likely unemployment also starts picking up. Companies try to remove their employees, try to fire their employees so that they can maintain the cost in the businesses. So that's unemployment rate also increases. Inflation overall slows down because the consumer spending has decreased. So you can imagine that in such state, what are the expenses which you would prefer doing as an individual? So if you think all of those expenses that could be relating to, say, health, which is a healthcare industry, all of those pharma companies, and then several hospitals and clinics which might be listed on the stock exchange are the ones which you can look after. Then completely healthcare sector. Then your telecom expenditure, irrespective of whatever happens, you are going to make calls to your friends, colleagues and family members. So those telecom industries. Your utilities, you need basic life living, such as you need electricity, you need water, you need gas. All of those utilities, utility bills, you will end up paying irrespective of whatever happens in the economy. So these are the three sectors which are to be considered for investing during this recession phase. And then finally, in the last phase, which is this trough state, which is also called as the bottommost state of any economic cycle. This is a phase where the GDP contracts. Now the GDP contraction, by bookish definition, it means for 2 successive quarters, GDP returns are negative compared to last year data. Then we call the economy has entered into this recession phase. So during that phase, many companies try to fire their employees to maintain their cost. Their unemployment rate in a way in the entire economy in the nation increases. So consumers as a whole become very conservative during this sector. So if you ask yourself which all expenses you would even continue to do in whatever the tough situation would be, whatever recession is there, there is an unemployment, but still you would continue to spend out money upon it, such as the retail industry, the retail products, the groceries, foods that you require in your day-to-day living, then consumer durable products, those are the items which you would otherwise be always purchasing, then your textile, your apparel. In this same time period, financial services also play out, and it is very nice and a good opportunity to invest into financial services sectors such as banking, insurance. These are the key sectors which play out during this period, and it has been proven and seen in the historical data. So these are the sectors which you can consider for investing in this tough time whenever there is a bottom in the economy. This concept of different sectors which we are discussing in this video today is called as sectoral based investment. That means you move your money sector by sector depending upon which sector will perform in which phase of the economy. So that's also called as sectoral rotation. Now I will show you one very nice data which explains about how Indian GDP is compared to sectors, so that you get a clear distinctive opinion and a view that which all sectors contributes the most to the Indian GDP where you could be investing into. So if you see this data over here, this is a sectoral distribution of Indian economy. Collectively, Indian economy is broadly categorized in three different sectors, which is services sector, agricultural sector and industry sector. Within services, there are three further subcategories. One could be defense products, public administrator and defense sector, financial real estate, which caters to your banking, insurance and all of those NBFCs and financial companies. Then comes your trade, hotels, transport, communications. So these are all concentrated towards services sector. So if you see, agricultural sector, which is only 20% of the India's GDP, whereas 53% of the India's GDP is driven by services sector. So that was a period almost 30-40 years back, or even maybe older than that, where if there is an impact on the agricultural production of India, the entire economy may collapse. But now that is not the state, which is proven in this chart here. So services sector is definitely a big sector to invest into. Other than that, industry sector also plays a very important role, which caters to electricity, water, gas, all those utility expenses which you would do during the recession and a trough phase. Then the manufacturing sector, construction sector. So these are all different sectors. These all play out during different phases of economy, and you as an investor must know which sector to invest, and I hope you have got that information. So what I have done over here is I have considered Nifty, the index that we know, which tracks the top 50 companies listed in the stock market, compared that with different sectors. So likewise, you can build your own chart and understand this and interpret which sector plays very well. So if you see this over here, the yellow line which represents the metal sector. When Nifty was growing from this period, in this phase, Nifty has seen a positive growth. Whereas if you look at the metal sector was actually declining in this period. So this proves us that different sector performs in the different economical phase. And this is a live example of the data where Nifty is increasing, whereas the metal sector was falling. So to summarize on this video, the learning and the takeaway that you are having is, in the economic cycle, as and when the economy grows, there are different phases. There is an expansion phase, there is a top phase, there is a recession phase, and there is a bottom phase. In each of these different phases, there are different sectors which performs well. And in each of these sectors, there are companies who performs well, which are corresponding to these sectors. And for you as an investor, if you invest in those companies which are likely to do well, because the sector is going to do well, because the economic is in that particular phase, your investment return will grow. I hope you like this video. Let me know in the comment below. Do subscribe my channel. It's a motivation and an indication to me that you're liking such content. And do let me know in the comment below if there is any specific topic that you would look after for me to cover for you. This is Ajinkya signing off. See you in the next video.